Morning, everyone. It's Wednesday morning around 5 after 9. This is your pre opening comment, video number 286. And if you appreciate the work, please subscribe. The futures have been all over the place this morning. When I woke up at 4 o'clock, they were down 200. Since then, they've been up 200, and currently it looks like an opening of up about 120. The Nasdaq and the S&P have never gone to negative. It looks like S&P looks up about 12, and Nasdaq looks up about 70. There's a lot of information out there. There was a bunch of housing industry information out. Housing starts level of 1.1 million versus previous 974. Housing starts were up 4.3%, but were expected up 22.3%. And permits were up 14.4 versus 10.8 expected. The problem for the housing industry has been the availability of both land and labor. So while there are plenty of permits, starts have been weak. The major home builders have been a little short on land, and of course the COVID-19 has hurt labor availability, and materials are kind of wishy-washy here. But it is getting better, and they do expect a little bit of positive action. As I mentioned in last night's video, Norwegian Cruise said that they have suspended their cruises through September. At the same time, Southwest Airlines has committed to no middle seat use also through September. Oracle had earnings yesterday. They beat on the profit side, but missed on the revenue side, and the stock has been lower ever since. It was up about $1.30 yesterday, and in late trading it was down about $2.30. Oil is a little soft here, not much action, concerns about spikes in the virus, and usage is the main reason. Asia and Europe were both up slightly, so that's somewhat supportive of our market. And in corporate news, we have Target raising starting wages to $15 an hour, and they have shown that they have in the neighborhood of $1 billion given to their employees through raises and bonuses and time off availability. We've had a couple of stocks. I'm going to just give one today. Carver Bank Corp. This little company yesterday was $241, up 40 cents or 19%. And this morning it was first trading in the neighborhood of $10, up 82%, and all of a sudden it's $14, up almost $11, or about 400%. This has been a typical feature of this market. It's like the John Templeton idea after World War II that anything that sold for less than $1 in $18 an hour, inflation adjusted since then, buying anything that was selling for under $1 on the NYSE. It seems as if people are just doing nothing but scanning to see what the lowest price stocks are, and if they've moved, and being in them for usually 2 days. The first day up, the second day up, and out. Netflix founder Reed Hastings had an announcement at 8:45 this morning that he is giving $120 million to traditionally black schools, Morehouse colleges, uh, in order to create scholarships. And we have this gold chart here. We're long. We got long Newmont yesterday, and we had a very tight range. You know, closing in the middle, up about $9 yesterday. This morning we have a slightly lower high and a slightly lower low. This is still the area that I want to be long in. We only put on a half of a position yesterday, with the understanding that I was probably going to try and buy more, double it up if we move down to 1700. Hadn't noticed this uptrend line, which would be right around that 1700, and the downtrend line. So we're working into a little apex here, and if we come out of it on the top, which is what I expect, we will absolutely move towards 1800. And one little bit of technical analysis from the technical guy at Strategas. His point is that we are not rotating in the traditional sense, which is moving from one area or sector to another. What in fact is happening is that the rally is broadening out, and he cites a statistic that has only occurred 3 times, and that is a sharp rise in the new high list. It occurred in 1974 at the bottom of the market. It occurred in August of 1982, which was the beginning, from my perspective, the beginning of this bull market, and in the bottom at 2009, which was after the Great Recession. In any event, that's what we have this morning. Looks like an interesting day, and I'll be back later.